Yeah, we're happy to be here.
Thank you.
And we're zooming in from Shanghai, Silicon Valley, Singapore. Yeah, it's a real global venture capital panel here. And I was happy to put it together for the Cyberport Venture Capital Forum and to play a role in inviting Steve Hoffman as a keynote, as well as Bill Tai later on to talk about NFTs. So we're always happy to support Cyberport Venture Capital Forum. I think this is our 4th year of doing this, but only the 2nd year virtually. So we hope not to disappoint you. We're going to run through a number of investment trends, what's actually happening out there in the world of venture globally and outside Hong Kong, because we already heard a lot about Hong Kong from our prior speakers. So why don't we start and do a round the room with each one of you to talk about a few minutes about what's happening in your own market. So Carmen, why don't we start with you from Singapore?
Yes. Hi, good morning to everyone. Thank you for the privilege of being on your panel. So what's happening in our region? So for Vertex Ventures, we are actually a global venture fund, but we have got very local chapters. So the chapter that I'm involved in is actually the Southeast Asian plus India chapter. And I tend to focus more on Southeast Asia. I don't profess to know too much about India. We have a team there. So for the Southeast Asian region, we have been a sleeping giant. And I will say that we are about to wake up. So from 5 to 10 years ago, we were just trying to nail a handful of unicorns. Right up until I think end of last year, we only have about 11 unicorns. Quite sad. But since then, 2021, despite COVID being prolonged, we already have about 40 unicorns. And there is good repercussion as a result. One is we start to see more investors being interested in our region. Number 2, we see a lot more excitement among startup founders because they realize that there's money coming in. And number 3, some of the questions that we have to answer was, is there exits? And we are happy to say that there is exits, more in the making. So we'll probably cover more of that in the questions to come.
Sure, we will. It's interesting that you talk about Singapore and Southeast Asia as a sleeping giant. I remember when they said that about China. Yeah, so William, let's go to you. Tell us what's happening from a Shanghai perspective.
Sure. So we're focused globally, but for us, we're helping startups from around the world expand to Asia. And we do that through partnering with large corporates, multinationals. We're lightly engaged with about 230 multinationals and working quite closely with 42 of them, doing usually $20,000 paid pilots and POCs, helping startups from around the world enter Asia, enter China. Usually you think you go to China and you want to sell to local Chinese companies. We found that it's actually a lot easier to come into China and initially sell to large multinationals who are under pressure from local competition. For China, that's where we focus on, mostly enterprise and mostly selling to multinationals as an initial way into large corporate before selling through that corporate to the rest of the region. On the consumer side, we are again partnering with multinationals, many telcos, as well as handset brands and media companies on the consumer side. And we took a page from Xiaomi, but I didn't have $2 billion to start my own handset brand. So we partner with corporates who give us free advertising for our services, and in return we give them a revenue share, lifetime, all revenue streams. So think about it like a super app in a box for large corporates. And we're seeing this trend spread across Southeast Asia, India. We're now in Pakistan, Bangladesh, and just did our first 6 investments in Africa.
Yeah, and I understand you're going to be opening some new spaces in Manhattan and New Jersey as well next year.
Yeah, so for our Hacks hardware platform, we're partnered with the state of New Jersey, and they gave us a $25 million grant for a $50 million project there to launch Hacks USA. And IndieBio last year received another $25 million grant from New York State to launch IndieBio New York, formerly IndieBio London. Government, private partnerships really having a major impact.
That's good. You're going strong. Okay, and we know that India is going strong and is the real up and comer right behind China. I mean, for years, it was India is next, India is next. And I always heard, oh, 5 years from now. But now I think is the moment for India. So Mohanjit, tell us. Yes, tell us. Is now the moment for India?
Absolutely, absolutely. So, there were the roaring 20s in the US back in the 1920s. The 2020s are going to be the roaring 20s for India. And to just follow up on what Carmen was saying in terms of unicorn creation, I think that's the right metric to use as a proxy for what's happening. And so India now has over 90 unicorns. 30 plus 33 of them have been created this year alone. And what's interesting is it's not just the India for India companies that you may have heard of, the Olas and the Oyos and the Paytms and so on. What's really interesting is where we end up focusing, we at Iron Pillar, is companies that are building products from India, but going after global markets. So about a third of those unicorns are actually enterprise SaaS companies and deep tech companies that are building product in India, maybe doing their initial product market fit there and then going global. And then the other exclamation point that I'll just point out is one, India now has over 10,000 funded tech companies, which is a remarkable number. And second, tech companies, I think in the first half of this year alone, raised about $12 billion in venture capital, which is more than twice what they've raised in any other year, right? So this is the watershed moment for India, and I'm looking forward to talking more about it in the discussion.
Sure. Okay, Jake, from where you sit in Silicon Valley, there's a lot of talk about how Silicon Valley may not forever be the global crossroads of technology innovation. What do you think about that? And where do you see, how do you put US in perspective with all these global VCs on stage right now?
I think it's a great thing that Silicon Valley isn't the global crossroads. I think there's an opportunity to innovate in every part of the US and every part of the world, and to use technology to create better products for consumers, better services for consumers. I think that's a great thing that innovation is spreading all over the world. As you know, Rebecca, I was involved with Lightspeed when we entered China and India in the mid-2000s, and have seen it come such a long way. And to me, that's great. And watching what's happening in Africa is absolutely amazing. Places like New Zealand are developing, innovation economies. And look, I think there's so many places in the US now that are starting to have innovation economies. COVID was a horrible thing, but what it made people realize is that you don't have to all be in one place to innovate. And so I think it's just a hugely positive trend.
Yeah. How many are zooming in from home right now? Okay.
I'm in the office.
Carmen's in the office. So I'm in my semi-office. So we're about half and half. This is kind of the way the world is now, hybrid world. So anyhow, I want to ask you, the pandemic, instead of slowing things down, it actually seemed to have sped things up. So what do you think about that? How is that possible that we could see a speed up in innovation and venture capital, given all the challenges of adapting to a new environment?
I would give an answer that, it's simply digital transformation, right? That every business realized that, they need to be better at engaging with their customers online, better at finding customers online. And it's so trite, around here to say it, but every company realizes they have to become a software company, technology company, if they want to scale, if they want to offer, if they want to be able to compete, right? Because if they don't do it, they know that their lunch is going to get eaten by a smart group of founders who are going to innovate and come up with better products and services than the incumbents.
Right. Yeah, definitely.
I mean,
Mohanjit, yeah, go ahead.
Yeah, I'll just say a couple of quick things. One is, mindset is a very, very difficult thing to change. And there's nothing like a pandemic to do that. And so on the consumer side, clearly that shift occurred in terms of technology adoption. On the India front, for example, what might have taken years, right? It took months in terms of coming online, in terms of adoption of smartphones and really having people get comfortable with transacting online, et cetera. On the enterprise side, it was an aw shucks moment, right? It was this, oh my gosh, we can't plan for things like this, but now we need to. And that goes back to Jake's point around resiliency, infrastructure upgrade, digital transformation, and not to mention, now we have millions and tens of millions of employees that have to work remotely. And what in the world do we need to do to make that happen? And I think that was all, those were the COVID beneficiaries in terms of the startups that ended up doing well.
Yeah.
Yeah, we also saw innovation coming from companies, and it's not innovation because they want to innovate, it's survivability, right? So all of a sudden they realize that, look, we are not going to do any more in-house dining, on-premise dining. We need to survive. So immediately they have no choice but to ask their nephews, grandsons, granddaughters to help them create some digital menu of sorts and to link up with in our side of the world, the Grab deliveries and the food pandas, etc., just to make sure that there's people who know of their presence, people who have been patronizing their restaurants can get to eat at their restaurants and thereby causing them to have one more day to survive. It wasn't easy, not much of a choice, but they just have to push themselves to adapt and adopt technology.
Right. Did you find that due diligence was harder or easier in this environment?
For sure, due diligence was harder simply because we are unable to travel. So many things we take for granted, where we size people up over meals, over coffee, over beer. We can't do that virtually. It's just not the same. But I think what we had and thankfully done before COVID happened was to have friends on the ground. So we had to do more work. We had to talk to more friends who knows the founders and very indirectly, subtly, without revealing that we are doing a deal on them, to then suss out what are some of the good, the bad, the areas for improvement. More work, but not impossible.
So did the pandemic change the kind of tech sectors that you were looking at all? Any new tech sectors that you were looking at?
Yeah, I can continue. So for us, we have always been looking at three core sectors: consumer internet, fintech, and enterprise SaaS. But we also had secondary sectors in the agri-tech, food tech, as well as health tech. Those were just making early days investments. But with the pandemic, it basically just emphasized that we had to look more into these two spaces. And so we kind of had more opportunities to invest. And it was also because of the pandemic, there were more opportunities that came up as well. So yes, doubled down and confirmed that there were new sectors to look at.
I think there are some interesting new sectors or some emphasis on certain sectors when you start thinking about distributed workforces, work from anywhere. It has real implications around collaboration tools. It has real implications around cybersecurity and how you deal with now everybody's outside of the hard perimeter, hard shell office and doing things from the lightly protected home environment. It had implications for certain businesses that help people, hire remote workers, pay remote workers, insure remote workers. And so this idea that COVID caused a fundamental shift, not a temporary shift, in this idea that people will no longer be going to the office 5 days a week is a bet that a lot of VCs are making.
Yeah, China's been a bit different. So for China, we've been back in the office since last year, March. So things are pretty much business as usual. The challenge is no international travel. And as most people know, 40% of global luxury spend is China, and most of that was actually taking place outside of China. So you had a real boom in new consumer brands, new Chinese brands, for everything from bubble tea to actual loose leaf tea to clothing, and a big focus on health and getting out and exercising. And so because most people used to go to Italy or they go down to Thailand, and now there's some domestic travel, but a lot of people really focus on outdoor activity and doing things domestically. And there's a huge amount of spending on local domestic brands.
Since all of you talked about unicorns, do you think that unicorns are here to stay? Is this going to continue to be like these super valuations behind these startups and high growth companies? Or are we going to see a tipping point on that?
Yeah, I think as early stage investors, we're not chasing unicorns. One of the challenges for investment over the last 7-10 years, and somewhat driven by SoftBank vision, is that money's been used as a weapon to drive winners, right? And so what we're trying to do with our MOX ecosystem and China Accelerator, where we're partnered with large corporates, is try and move away from that and use trust as a weapon, where we're using cross-promotion partnership for revenue share instead of the traditional media model. I've got this, so I've got this like zoo analogy, like in the traditional West, Google, Facebook, Amazon, Apple, they build a wall around the zoo, and the consumers are all the little zoo animals inside, and you have to pay a fee to get inside the zoo to look at the zoo animals being the consumers. Whereas the China model, there is no wall around the zoo. Anybody can come in and look at the zoo animals, but they need to use the currency of the zookeepers, Tencent, Tenpay, Alipay, in order to buy biscuits to feed to the animals, feed to the consumers, or engage with them. But we're trying to move to everybody can make their own zoo, more decentralized Web3 model, where cross-promotion and partnership are driving.
Yeah.
Sorry, what?
William, what about the unicorn question, or Mohanjit, from India's standpoint, the unicorn?
Yeah, so under this model, you don't you just go profitable. So we're more interested in dragons, not unicorns, because unicorns are valuations artificially created by VCs, whereas dragons are companies that actually return money to both the entrepreneur and to the VC, and it's based on revenue. Not ROI negative unit economic spend.
So I'll just add to that a little bit and maybe push a little. So look, valuations are inflated. In my humble opinion, they're inflated, and there's going to be an adjustment. Now, I don't have a crystal ball to say what that adjustment is going to be, but our fundamental belief is that if we are investing in companies that are really solving a customer's problem, whether it's on the consumer side, or in my case, I focus primarily on the enterprise side, and you have the fundamental metrics that make sense, gross margin, acquisition cost, lifetime value, magic number, et cetera, then the multiples will shift. What's trading at 15, 20x forward revenue multiple will probably adjust. Will come down to, I don't know, 8, 10, whatever it is. But fundamentally, if the revenue is there, if the retention is there, if the unit economics make sense, the market will be what the market will be. And so one of the things that I worry about, quite honestly, and I'm sure there are a bunch of entrepreneurs in the audience who have this sort of googly-eyed unicorn expectation, is there is a little bit of this, spoiling the entrepreneurial mindset that's going on. There's way too much money being offered, and there's almost an unspoken, and in some cases overt, pressure to spend that money. And that just reminds me a lot of the .com, era that we lived through. And look, there is flight to quality, so the valuations will be what the valuations will be. There's a FOMO effect and scarcity and all those things. But I think as investors, our job is, or ought to be, to really, get away from that frothiness, if you will, and just focus on the real entrepreneurs who are actually solving a real problem for which a real customer is willing to pay in a sustainable way.
So Jake, do you agree that there's a lot of froth in the market right now?
Yeah, I think it's a pendulum, right? And Mohanjit and I know Mohanjit's seen this for multiple cycles, and I've seen this for, I've seen 3 of these cycles. And in this froth, I think froth is, not a good term, because it doesn't distinguish the fact that there are special companies being built. It kind of presents this picture that everything is overinflated. And I would argue that there are absolutely special companies being built that are getting premium valuations, and people will make significant amounts of money even from those premium valuations. And so I think in this environment, it really is, for an investor, distinguishing what are the truly special companies from the ones that are not truly special. But from an entrepreneur's perspective, right? If people are giving entrepreneurs lots of money at high valuations, they should think about how to make the most of it and, have healthy cynicism about, hey, is my business really worth this much right now? If it's not, how do I make this money work so I could hit significant value creation milestones beyond, what I have at this valuation? And so, it goes back to on both sides, the entrepreneur, really trying to bring their own grounded perspective, which is very hard to do in this environment. But I think if they do, they have a chance to turn that money into something that does create a lot of value versus, blowing it, having a crazy burn, and then being forced under this treadmill of always, needing to feed the beast.
Right. Yeah, I will also add on to say that actually, to me, valuation is actually linked to a virtual supply and demand mindset. So when we think that there's only one team who has the ability to crack a certain opportunity, and it's that one team who's able to execute way better than others, then perhaps maybe we can warrant to give it a slightly better valuation. However, as I observe, here comes company A, and the valuation was marked up quite highly. And soon enough, there's a company A prime that is doing somewhat similar, that is raising equally high, if not more expensive in terms of valuation. And after a while, I started to see that there's enough companies that's doing about the same things, but all of them are overly valued for whatever that they have delivered. Then judgment is on our side to say whether or not we should FOMO and follow and invest, or maybe that we just have to wait for the correction to happen, and in the meantime to channel our attention to something else. So for us, we tend to like to look at the latter, which is to look for things that is yet to be uncovered. And absolutely right, there are actually good opportunities that is under the radar, where the founders are less able to maybe do a great marketing pitch.
Right. So Jake, you mentioned
about funding efficiency.
Yes.
Yeah, so funding efficiency is a key metric. Like, how much money have they spent to get to what level? And can they continue to grow in an ROI positive way? So we're really focused on traction first, then fundraising. Now, of course, if they have that ability to turn $1 into $2 or $3, then sure, you can pile the cash on top. But you shouldn't be raising huge amounts of cash. You shouldn't be taking venture debt unless you already got very positive unit economics.
Very good point. So Jake mentioned special companies, and Carmen talked about that as well. And so I'm just wondering, everyone's talking about the metaverse these days. What do you think about the metaverse? Is it overhyped or not? Is this going to really change things for all of us in the tech world and the venture world?
I can speak to it. I mean, we did my first metaverse investment in January. And the metaverse is many things to many people. I mean, by definition, it's supposed to be open, and our metaverse super world is very much open. Anybody can put any content anywhere, but it's actually focused on the world, planet Earth. And they did something quite interesting from a financial standpoint, in that they cut up the world into 64 billion plots, almost like little monopoly squares, each one about the size of a city block. And each of those 64 billion plots is an NFT that you can buy. So while they're building out they're trying to turn the world into a giant art gallery, a place where people can interact with creations and each other. But in the meantime, they've got this monopoly type model where they're actually able to bring in cash. And they're not huge, but they're maybe ranked number 48 in the world in terms of weekly sales. But that allows them to have enough cash to build out what is a pretty amazingly large ecosystem required, community required to have a properly functioning or a vibrant metaverse.
Anyone else have a metaverse deal yet, or looking at some of them?
I think
Go ahead, Mohanjit.
Yeah, on the India front, it's still, what's interesting is there's a bimodal distribution. So on the front end, especially around sort of more traditional crypto, if you can even use that phrase, in terms of exchanges and so on, there are multiple unicorns. But the metaverse that William, for example, has just described in terms of this sort of immersive world and so on, that is still in its infancy from the India context. Now, one factoid that I'll give you, which is really interesting. So we're right now in the Diwali festive season in India. And instead of giving cash, which usually comes with, a box of Indian sweets and in a little, colorful package, people are actually gifting Bitcoin, right? So that has become a fascinating and fantastic, potentially, trend in the Indian context. And when you have tens of millions, maybe hundreds of millions of people doing that, you can just see how that can actually blossom into the metaverse, maybe a few months downstream.
Yeah.
And I was going to mention, I think, metaverse, again, it's such a vague term, right? And, really the questions are, what are the compelling, consumer use cases that are going to emerge? And I think you have to really look at this from a micro perspective versus a macro perspective. The macro lens, it's going to face the classic overhyped in the near term, underhyped in the long term. We're at a lot of hype right now, but there's certainly, from a micro perspective, people coming up with, amazing new consumer services that have different, maybe sub-elements of what a metaverse might be. And I think that's really the thing to keep an eye on at the micro level, not at this kind of macro level, which is feels overhyped right now.
I think it's a matter of time. I'm quite excited to see opportunities here. We haven't done any investments yet, but where I look at it is number one, who aggregates all these users? So to William's point about Super World, yes, from that angle, you can aggregate users. But we also have got the large companies, right? Meta is one, and then you have got SoftBank investing in another one, Zapato, etc. So end of the day, where do you bring in the crowd? And after you have brought in the crowd, how are you equipping them such that many can become creators? So where I see it now is the creators is still confined to a few people, a few groups that create, while the rest are mainly consumers, and they may trade, they may wear different apparels, etc. But it will be really interesting when we start to empower people to start creating and creating multiple games. Most of them are currently entertainment related, but can I create a game on this universe where people can start to come and play and thereby forming my little community? So I do see that whatever we are looking at in the real world can actually transit into the metaverse world, and where we can hop around different platforms with minimal friction, right? So I am excited to look for tools company, actually.
Okay, good. Let me follow up with a broad economic, geopolitical kind of question. There's a lot of talk about the tech titans, right? And whether they're becoming too big, too powerful, and we're seeing this play out in the US and in China as well. Does this kind of thinking impact the way you do deals at all? Does this factor into your pace of investment, the types of investment you do, or due diligence, or any other factor of your investing style?
Yeah, I mean, I just jump. I founded MOX 6 years ago to create an alternative decentralized ecosystem of consumer internet companies. And again, based on cross promotion for revenue share, both within the startups, but also within our corporate partners. The telcos were under attack from big internet. The shopping malls were under attack from e-commerce. The banks were under attack from the fintechs. So we've done pretty well just recently. The first 4 years, most of the corporates wouldn't give you the time of day. But over the last 2 years, since mid-2019, we went from 6 million monthly active users in our portfolio ecosystem of about 50 companies to 50 million at the end of last year, and now 93 million as of this June, and growing again with a customer acquisition cost of 0. And now just cross-promoting for revenue share. So Apple did us a favor when they shut down Apple unique identifier. Google then shut down their Google unique identifier, creating using privacy to create a virtual monopoly in online advertising, and really actually pissing off most of the world. So we're creating our own unique identifier, no PII, GDPR compliant, and our own alternative advertising system. So we'll see what happens. We're only at 100 million MAU now, give or take. Our near-term goal is to hit 1 billion MAU in the ecosystem, but we're hoping to have that alternative.
Okay, as an alternative. Okay, on that question of geopolitical economic issues and how it's impacting your investing, Jake or Mohanjit or Carmen or anyone care to address that?
Yeah, I can speak to it first. So honestly, I feel that there's always going to be tension, sometimes geopolitical, sometimes just tensions not related to geopolitical. But where the beauty of entrepreneurs will be how they are able to navigate regardless of the tensions. And I think this is where they are able to find alternatives. I mean, just look at how NFT is being repositioned as digital collectibles in some regions. Right, so they are smart enough to come up with solutions in light of how changes are going to happen. And for that, I think we are backing entrepreneurs who are innovative. Then as to some of the geopolitical situations that happen, then the other countries or companies that are in those other countries that has got opportunity, to what extent are they ready to take on all this new load of opportunities? Is their workflow well prepared? Have they gotten their sourcing capabilities done, etc.? So we see that Vietnam is a great beneficiary when procurement became an issue. Now, how are some of the startups adopting to the new opportunities? I think this is where the founders and therefore the investors and board members have to help them to seize opportunities when they present themselves.
Yeah.
So I'll make a couple of statements. One is, clearly when we go out and raise money, one of the risks that we have to identify, and we do identify, is geopolitical, right, on the India side. So for example, India, China, India, Pakistan, those tensions continue. And so when the TikTok ban came into effect in India, boom, all of a sudden there were multiple entrepreneurs virtually overnight who extended their existing brands to take on short form video. So Moj and Josh and others popped up. Now they may not have the best tech; it's not the same, but there was a vacuum that got taken because that's what entrepreneurs do. And then the other piece that happened is because of the capital being sucked out of India, at least through the large corporates that were coming in, all of a sudden there was this movement, and just happened to coincide with COVID and so on, but there was a movement, what I call the second coming of tourist VCs from the US going into India. So you have folks like GGV and Insight and General Catalyst and others who don't have a presence in the country, but they saw this void and they said, boom, we're going to go in and deploy, hundreds of millions of dollars. So I think those are some interesting takeaways from the sort of geopolitical tension actually creating some tailwinds in the Indian context.
And Rebecca, I think it's interesting in the US, companies have such a big domestic market here that it's generally easy for them to not worry about geopolitical concerns for many, many years. There's certainly the tech titans and they have their battles with the government, but, whether they battled with the government or not, startups, we invest in startups that are hopefully doing something different than what is core to the big tech titans. And so it's interesting versus the time I spent in India and China, I think geopolitical concerns is much less of a factor here in the US because of the large domestic market.
Right, and I think as every one of you mentioned, it's very hard to suppress the entrepreneurial innovation thread that it just runs through all of this, right? On a grassroots level, and it bubbles up no matter what, it seems. Okay, I see a lot of nods there. So I think we'll end it there with a lot of nods. And if you enjoyed this particular session powered by Silicon Dragon, please join us tomorrow at 8:30 Hong Kong time for Silicon Dragon Hong Kong as part of the Seid Report Venture Capital Forum. Thank you very much.
Thank you very much.
Thank you.
And everyone, please stay for one more second. Can I actually get everyone to take a beautiful photo on Zoom for this moment? So everyone, please show us your best smiles. Thank you. Great sharing session, by the way. Thank you once again. Big round of applause from here from Hong Kong. Thank you.
Thank you.